Good evening. This is Ken Long from Tortoise Capital with a review of a couple intraday and swing trades from today, August 28th, 2012, and a quick look at the market health check. This is an example of a core and turbo trade using the sideways quiet channel. It started yesterday on August 27th with symbol UVXY. That's the double leveraged VIX ETF. These are 3-minute charts marked up in the usual way. Yesterday afternoon there was a long period of sideways quiet channel defined as a narrow range on the Bollinger Band, a slope of 0, meaning flat, on the 30 period moving average. That's the red line. That's the center of the Bollinger Band. And then a channel in that both 10 and 30 period regression lines and price are all contained within that channel. And so the trade on SQC is the breakout. Get the entry at 5:05 in the green circle. Within about half an hour or 40 minutes, it's up to 5:20, where I take 80% of my position off. This had an initial stop of 20 cents. What's shown is about only 8 cents because the chart ran out of room, but my actual stop would be 20 cents below this. So we get the entry at 5:05, exiting at about 5:20 with 80% of the position, because I want to carry some of this overnight, but have to respect the size of the gap, which you'll see is considerable. So end up keeping, excuse me, 1/5 of the position. Right after selling it, naturally, it continues to go up and closed around 5:25, which would have been a full R. But then the piece that's held overnight gaps up and then runs up to 5:40 very quickly in the first couple minutes of the day, and when it peaks here and then starts to hesitate, I go ahead and take that as the extra swing trade. So that's a nice example of core and turbo combining intraday and overnight trades. This morning there was also a sideways quiet channel in TNA. That's the triple leveraged Russell 2000. Yesterday it had closed in this sideways quiet channel. It started opening and left the river and started running up. So enter at 56.06 with a 30-cent stop, puts it just below the VWAP down here almost by the southern end of the river. It immediately runs up to about 56.70, pulls back to 56.55-ish, which is where we're looking for an exit. You can see here, end up getting the fill at 56.50. Powerful move out of the river, gets as high as it's going to go, starts retracing. You can see the Bollinger Band, the 2-period Bollinger Band rolls over. The mean changes. When it comes back to the 10-period regression line, that's the blue line, that's my signal to go ahead and get out. It's at 56.50, so in a matter of about 12 minutes or so, that's about 1.5 R, 1.4 R, something like that. This price ended up coming all the way back to the mean, and then did the same thing, ran up to 56.80. So this same basic trade was available a couple times during the day. But I just wanted to demonstrate the sideways quiet channel and why those first early moves are worth examining. Where we are at the end of the day, we did not make a new high today, a tiny little doji. We're inside this yellow zone, which I would consider the tight range between 140 and 143. It flirted with 143 and then has failed. It's now come back below the 10-period moving average. It's back into the river, made a lower high, could not break away and break through 143. That's getting me a little bit concerned. It's still well inside the regression channel, but now it's in the lower half. Violation of 140, that red line, will cause it to come down and test the bottom of the regression channel about 140 or about 139, I would say. Failing there, it fails through 138. Then the bottom of the river and the 50-period moving average And if those don't hold, 135 and 133 are within target. So there's a lot more downside concern in my view right now, even though we're still in bull quiet. It has to make a run here at 143. Tomorrow is going to be pretty important. It didn't make a new swing low. It was a light volume day. I think people are waiting to see what the Republicans are up to and what the hurricane's going to do. But breakouts, I would want to be long here on a market going up in order to be in the position before it breaks through 143. Because if it breaks through 143, I think we end up seeing a big white candle kind of day like we saw back in here at the end of July. So that's where I see we're at tight trading range, still pointing up, still bull quiet, still within the noise band, but it's starting to get problematic. This little pullback found support at 140. Now what can it do? That's what we'll be watching. So I'm prepared to go in either direction on this one, but with a generally bullish preference. So thanks for your attention. Ken Long at Tortoise Capital. Keep your powder dry.